Good morning. Welcome to the Brew on this wonderful Monday morning. I'm your host, Lex, and today we are going to talk a little bit about GameStop. You remember that one, GME? We're going to talk about the life cycle of an options trade. And if we have time, we're going to head into Iron Condors. So let's get busy and get to that opening bell. Good morning, Mal. How are you?
You make me happy, Lex.
Oh, you make me happy too, Mal. Thanks. How was the weekend? Good?
It was good. It was really good.
Yeah?
Got pool time.
The party was good?
sun. Yeah, it was good.
We announced it was your birthday, so just making sure. Right?
Right.
All
Going
right.
backwards.
So we have a few topics to cover today. We didn't quite finish Tesla last time, but what we're gonna do with that is we're gonna circle back at the end, possibly. The beauty of this is we do this 5 days a week, and we can always pump in one of these trades we're talking about at any point, right? So we'll get back to that Tesla thing. And remember, the topic of Tesla was Molly's going to come up with what she thinks it's going to do. It's either going to go down, going to go up, or kind of just linger around where it is. So when you come up with that, we're going to think about some trades around that. How's that sound?
All right. Sounds perfect.
I think it's going to be mostly Lex today. Molly's like a
So just on that note, this one is a shout out for Stefan and Jason. We've got 2 embers going on today. As I trained for 4 a.m. wake up call here. So
that's what a great cup.
We're on
I need to get my Tradier cup too, so I don't have that yet.
I know.
I'll get it. All right, let's get into it. GameStop. What do you want to know? So remember what happened there, right? There was this, I think it was Reddit community, if I'm not mistaken. It could have been Discord. And all of a sudden, some group of folks decided they loved the product. That it, I think this stock was in just the cellar of sellers, right? It was so dead that it looked like it was going bankrupt. And all of a sudden, it got ignited by this Reddit group, right? And it became the meme stock. What does that mean, by the way, the meme stock?
Is it reductive to say that a meme stock is just has a cult following, and maybe I'd prefer to say maybe it's more value trading? Someone, a group of people love what they do. Maybe not as focused on under the hood.
Yeah. Okay. So that makes sense. I think, and GameStop became the poster child for that whole move. And I think there's a couple others. You had them listed there. AMC was one of them. There are a few others too. And what happened is that, and this is going to go into the life cycle of a trade too, which we'll talk about after the opening. So GameStop became very popular and people started buying calls. They just felt that it was going to make a run, or they were trying to perpetuate a run. And I'm not saying that, I'm not implying or saying that anyone did anything wrong, because it's an open market, right? And you are free to do within the legal confines of the business whatever you want, right? And that's what they did. And the stock, as we know, skyrocketed, right? I mean, like, not even funny. I think you have here 3,000% at one point.
I think that's just this year. I think that's just this year. Yeah, we've got just this year. GameStop's up 3,000%, AMC 1,000%, Kodak 200%, Virgin Galactic now up 100% just this year alone.
Wow, where's GameStop trading? Do we know?
Oh, I don't know. I just look at it. There are also now meme ETFs. That's a new thing. So we've got Round Hill meme ETF and Selective US meme stock index ETF, which is cool.
Right.
It's MEME and BUZZ are the 2 tickers.
Okay.
Right. Keep an eye on those.
So one thing we're going to do too, Mal, is we're going to have Trade Hawk open in the mornings starting tomorrow. I've got a cool new thing starting.
I'm so excited.
I take that back. If everything works well from the technology.
Let's just pause there. What is Trade Hawk? You built this.
Yeah, Trade Hawk's our advanced trading platform, right? So it's an option-centric platform where you can manage all of your investing and trading ideas. It does, everything the pro trader world did, because that's what I came from. And we brought it to retail trading over at Tradier, right? That's our Tradier owns it. It's the main advanced trading product over there. Really nice. It's one I use. It's one I built, quite frankly. I don't want to make it sound like I built it. I didn't write code. It was kind of the front end was more my idea. The back
You were the
end,
conductor.
we had to have professionals. Yes.
Conductor of the orchestra.
That's right. That's what I did. So anyhow, but it's great. We love it. So I'll show you that. We'll use that frequently on when we do spreads, and it shows risk analysis of all these spreads, so we get an idea what all this stuff means. Okay, so back to GameStop. All these people in the COVID, right? So COVID was a little bit of this too, because we were all kind of huddled in the basement, right? So you had all these people in the basement in their pajamas trading GameStop calls, and they were ecstatic about it. And the Reddit community and the Discord community, it's a community that information flows freely, right? So you type something in and everyone says, oh, that sounds like a good idea, I'm gonna jump on. So the movement of information and ideas went quickly. So people could sit at home and they could just start banging away on the computer to start buying these calls, right? Well, this is where the whole life cycle of the trade comes in. So what went on there? Why was it so just the speed and velocity of that move was insane, right? So what happens is there's a market, right? And all those calls have bids and offers. And that market is coming from the market making community. Someone like Citadel, for instance, is a market maker.
Let's throw that up, Ruben.
Do you know what I did that?
Yeah.
Citadel. Look at that. That's amazing.
You are powerful.
Okay, we can take them down.
All right.
So no, they're one of the big market makers. So that's what I used to do. I used to be a market maker. We would have competed with Citadel when I was in the business. They have to sell these calls, right? So when Citadel sells them, they aren't just going to sell them naked. I mean, not without clothes on, but without a hedge against it. So they have to buy stock, essentially, to hedge that short call, because all these meme people or the Discord people were buying these calls, right? And the investing community, the retailers who are doing this, they are directional. They don't have hedges. They're just buying these because they want to get long, and they're using options because of the convexity of options. Options can just, increase in value tenfold like that, right? With very little cash outlay. So now this Discord community is long calls. The professional community short them. They're having to hedge this stuff by buying more stock. So what does buying more stock do? Makes the stock go higher. So everyone's putting pressure on upward mobility of this stock all at the same time. Does that all make sense so far, Mal? What do you think?
Yeah. So it's
ask me a question.
All right. So normally you think that the Reddit community and everyone who loved GameStop drove the stock up, but actually it's coming from two sides. So if you could just dive in a little deeper, because I think that's a misunderstanding that it's just one-sided. We're actually, on the life cycle of the stock, there's this other pressure so there's like this perfect storm happening, two waves are building upon each other.
Yep. Yeah, that's kind of what happened here too. And remember, as the market maker community is getting short calls, right? The Reddit, I'm just going to call it the Reddit community for lack of a better term. Reddit community is long the calls. Market makers buying stock to hedge. Now, the important part about the market maker part is market makers aren't directional. Okay, so Citadel's, Susquehanna's, when we were in the business, we didn't have a directional bias hardly ever. Now, when I say that, I mean strong. We had a little bit of leaning based on order flow, but we didn't say, oh, I think, GameStop's going up, so let's get long. It wasn't like that. We provided liquidity. We made markets, and our edge was built in the bid ask, and we would hedge that bid ask every time we made a trade. So, Citadel's not thinking, oh, GameStop's going up. Now they might lean long because they're getting so short all the time. That's fine. But they're hedging. So every time they're making hedges, it's causing the stock to do something. And the bigger and bigger that market making community position gets, the more severe the movements can get. Okay. So what happens when Citadels of the world got short all those calls to the upside, they got short gamma. Okay. So gamma in options is how your deltas change. Okay. So when you're short gamma, right, as the stock moves higher, you're getting shorter and shorter deltas, which means you're losing money. So you're technically trying to cover those short deltas by buying more stock or something to get you long, right? All that
Interesting.
momentum pushes the stock even further up with these little
And
clusters.
that's a technical dissection of a short squeeze, correct?
It is. Yeah. So a lot of people, you know, place the short squeeze on GME around what was going on solely with the Reddit folks who were buying all these calls, which was sort of the the catalyst to get the ball, push the snowball over the cliff here, right? It caused the market making community to have to make decisions, and decisions meaning they had to start hedging, right? And they started pushing that stock up. Now, it's just not, it doesn't end there, right? So once the market making community has this position on, and they call them gamma clusters, right? And we have in Trade Hawk, you'll see this too. Again, not today. There are places in strikes where the dealer community, the market making community, has their positions, and we look at that, we analyze that in Trade Hawk. And when the market making community short gamma, which they were in GameStop, to the upside, which is very unusual in stocks for market makers, it's usually the other way around. They're always getting shorter as the stock goes higher and longer as the stock goes lower. So this stock started moving, and then they were getting shorter from their position, buying more, and they propelled it. And all of a sudden we had this scream to the upside. And you said GameStop was up like 3,000% or something like that. Is that right?
Let me check those numbers, but yeah, I think that's the estimate.
Okay.
As of this year
So
alone,
part of the issue with GameStop too is probably a very illiquid stock. Market makers held all that inventory. Just got a bunch of interest, and all of a sudden the chicken's out of the hen house, man. It's just going nuts.
right.
And once it caught fire to the upside, the market makers had to start chasing it. Now, everyone thinks the market making community got hammered, P&L wise.
Right.
That's probably true in the early phase of that when it first started happening, but they probably got caught a little bit with being short deltas and not hedging. But as time went on, what happened is implied volatility, as people are buying more and more of these options, implied volatility is lifted. So their early trades, their early shorts, the dealers were getting beaten, but the new shorts were, averaging up, as it were. And they started making some unbelievable trades, being able to hedge them. Things got so wild. I think when GameStop got up to like $400, whatever it was a year or two ago, the 800 call was like $12 with a week to go. $400 out of the money. So it was
that's off the charts.
That you sell.
How is it? Right.
Industry who sold stuff. I'm selling these. And it never even, breezed up to 800. But that's what happens in high volatility, implied volatility environments. Everything just kind of crinkles up, and prices are insane. That's what happened, obviously, because stock was going nuts. I mean, the daily moves were gigantic. I can't remember. I'll have a calculation for everyone in the near coming days on what implied volatility was then. I don't remember, but it was huge.
Okay, and then
huge.
Is that correct? There's an estimate that hedge funds lost about 10 billion on that. Is that correct?
Yeah, I think.
In which case?
Yeah, so those hedge funds are not market makers, right? So the hedge funds are people who had a short position in GME. They said, "Hey, I think the stock's going to zero. I don't believe in it for whatever reason." They sold it. They got short. So now they are, and that's a good point. I'm glad you asked me that, because they're part of that momentum upwards too. You've got Reddit people buying calls, market makers selling calls, buying stock to upward pushers, and then the hedge fund community short all these stocks, and they're having to buy that back because they're getting killed, right? And I can't remember the name of the hedge fund that got just utterly destroyed in this whole thing. But you have all of those forces pushing that stock up. Once it finally made its way and everyone kind of got back to happy ground, it kind of settled in a little bit. And I think the stock's back down in I forget, under 100, if I'm not mistaken. We'll find out tomorrow. One of these days I'm going to have Trade Hawk linked up, and I think it's tomorrow. I got to get all my screens together. So anyway, that's what happened there. And then the market making community ultimately made money. They were short all this premium. They kept selling it.
Wow.
Just 200, 300 volatility, implied volatility. I mean, $12 options that are $400 out of the money. You don't have to sell a lot of those to make a lot of dough. I have a buddy, not a
Wow.
buddy, he's a colleague who absolutely made 7 figures on selling those 800 calls. Just crazy.
Wow.
Yeah, it was nuts. So, all right,
Okay,
guess
so
what
how
time it
does
is? Are you wait, hold, ho,
oh
ho, ho, ho,
oh I
ho,
have
ho,
so many
ho.
questions. All right.
Oh my
Tell us
God,
what
ho,
today's
ho,
doing.
ho, ho. Guess what's open right now? You're not going to believe it. Let's take a quick look at the markets. What do you say? Do you want to read these, Mal, or you want me to?
Until I get my studio unblocked, so you got to cover me. I'm
Okay. All
relying
right.
on you. I'm relying on you.
Quick
I
look at
can
the markets.
kind
They
of see
just
it.
opened. This is live time. The Dow Jones is up 82, almost 83. 35,000. Wow. That's awesome. NASDAQ up 68, 0.5%. S&P is my favorite, up 18. You can see gold, oil. I don't follow that very much. 10-year, I kind of pay attention to. I need to know about the Euro USD conversion because I'm going to Europe at the end of the month. So I need to keep
Hey.
track of that, right? Not that I'm going to do anything with it. What the heck am I going to do with it? And VIX back to, right around 14, still, fairly low. Not much excitement there. Typical July day, right? Middle of the summer.
Yeah, I think we'll take a look at that goal when we talk about crypto and the comparison of and what is money, and so we'll keep that on the board for another episode.
But I can tell you this, this looks pretty good. The market's been very sound lately. It's been, this rally's been pretty good, and I can't remember. It's probably been about 3-4 weeks of a nice little rally here. This has been a nice little summertime rally. I like it.
We're going to touch base on wine futures. So why don't we get a head start? Why don't you give us one descriptive word using wine? Does it have full body today?
No, this is my Pinot Noir version. Okay. Don't get me wrong. I like Pinot Noir, but it's not super bold. It's kind of a little bit on the lighter side. So today's market is a little Pinot Noirish, but still positive because I like Pinot Noir. We'll get to wine I don't like. That's slightly not so bold that when we have a down day.
And you not only have a rock climbing wall in your house, but you also have a wine cellar. Is that correct?
I do. I love wine. So we'll make analogies to wine. We can talk about that all the time. But listen, wine has trading in it. Wine futures were a big thing back when I started my collection in the, I don't know, the late 80s, early 90s, thereabout. It was before you were born, Mal. Don't worry about it.
Well, the curiosity I have is, does Lex Luthor have a Shark Tank in his wine cellar? I've been curious about that.
I don't even like to eat fish. I don't like
to
take care of them.
Sharks need to be free anyway.
Yeah, they do.
I'm such a Californian.
Yeah, there you go. All right. So that GameStop thing, that's what went on there. And it perpetuated itself, which was kind of neat. And it has to do with this whole gamma. It's a big part of it has to do with this gamma clustering, which we talked about. And we'll get more into gamma clustering in another episode. But just remember that gamma thing was a big driver once the positions were put on with these firms. It was amazing. So and we'll look at more of that. I'll show you some other gamma clusters on the downside too. They have a lot of on the put side. So typical. Can we go? Let's be remarkable. What do you think? Can we be remarkable? I want to see if I can be remarkable here. I'm not sure it's going to come on. I might. By the way,
we are back up. We're not sponsored by Remarkable. We are just obsessed with Remarkable. There's a difference.
I love this thing. Okay, hold on. I got to present on screen. I realized that this thing goes to sleep, and it does the sleepy thing.
Wait, are you talking about me right now, or are you talking about the Remarkable?
Okay, my Remarkable. Like went to sleep on me. All right, I think. Oh, we're here. We're here. This is so cool. What was I talking about with Remarkable? Why did I go here? Gamma.
Well, we're going to talk about gamma clusters.
So here's a typical gamma cluster. Right? Can you? Oh, geez, look at this thing. I don't want to do this. Help me, Mal. This thing's not working. All right, I'm making a mess of it. I got it. Never mind. Can you see when I draw? Does it work?
Yeah.
Okay. Can you see that? Oh yeah, there it is. Duh.
I love this thing.
I know it is so cool, but I'm not good at it yet. Kind of spaz in here. Okay, here we go. Gamma. So what's a typical gamma? This is a graph of gamma. Okay, not of gamma. I shouldn't say that, but of gamma cluster. So this is the at the money. Okay, and when we measure gamma, these are strikes. Okay, on this axis X. What a typical market maker position looks like is they have clusters of long gamma to the upside. Okay, this is upside calls, or upside market, I should say. This is tending towards zero, so downside. And they have negative gamma clusters down below. Okay, so what people like to look at in the retail world, or they should look at, is where do market makers hold short gamma? Okay, and where do they hold long gamma? A market maker's behavior is different based on where that is. When they have long gamma, they're getting longer to the upside. And remember, market makers have to hedge. If they're getting longer to the upside, they're going to sell, 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 sell. What does that do to the price of a stock as it's running up? These big houses with lots of shares to sell are going to start making that stock stop running up. So when you see these long clusters, there's this whole maximum pain expression. You tend to see as expiration nears, people pinning things to strikes. And that's this market maker or world selling and buying stock around their long gamma to hedge their deltas as they change so much. Conversely, the short gamma side down below, where they're probably short puts down here, they're doing the opposite. As things go through short strikes, they're getting longer. Market makers, they got to start selling, right? Selling, selling, selling. And that pushes stock down farther. So what I like to say is when you have this, I'm looking at this on the screen. It looks like I don't know, a different language. And I write so poorly. My God, I got to figure that out. No, I like to look at where these long and short gammas are. If we have a big long gamma, a short gamma here, and a long gamma up here, you can pay attention to this. So you're going to have volatility around the short gamma levels. So short gamma, right, could equal higher IV and volatility movements, and it's the opposite on the long gamma side. So I like to know where those spots are. And if I have the ability to make a trade that's opposite the market making community, I kind of like that better. So that's why I like to know where these levels are. Now, I'm not just you're going to ask me a question on this stuff. I don't like to go in there blindly and just say, I have to be short gamma here and I have to be long premium here, right? It's got to set up with implied volatilities and value and all that stuff. And we'll get into that at another time. Does any of this make any sense, Mal?
Yes. And I think people would be curious, when they start to sell and that affects the price, how did Melvin Capital get out without affecting the price? So we might go into that in a couple episodes from here, but
that's a longer answer. Yep. Let's do that another time. Just remind me. But you're right. That's interesting. I think they ended up being okay. They got hammered. They lost a ton of money, but they got back in the game. They took their loss, licked their wounds, moved on. Right. All right. So guess what time it is? It's time for me to say that we're not getting to the life of a options trade because
I think we went through parts of it. We're on our way.
Parts of it. No, here's what we have to get to. Oh, hold on. Going back to remarkable. Sorry. I guess I can do it. Sorry. So here's what we're going to get to. Retail trader hits this button right here. Or it could be this button. Or this button on their computers. Okay. Once they hit this button, what happens to this trade? Where does that, and I'm going to talk more about options. Where does that go? How does it clear? How does it settle? All that kind of stuff. That was the point of our life cycle of a trade. Okay. Because what's interesting, and I think, again, I told you this the other day, I think, when I talk about this, most retail folks take a little of this for granted, which is okay. They should. It's not the biggest deal, but I kind of give a little color to where this all routes itself and how it all plays out. Because there's probably a few misconceptions about this, but it's kind of neat to know what happens when you hit that send button, right?
Absolutely.
And we'll talk about, we'll talk about, the typical market of a market maker, right? I call it, what do you call the offer of an option? You call it the ask or the offer? Is it like there's a bid and you call it the ask? Okay, so when I say ask, I always say,
call what you call it.
I always say ask, and everyone looks at me like, what the heck is an ask? And I say, or offer. It's the ask or the offer. So we'll talk about where market maker edges in here and why this all works out for folks. So I think it's an interesting discussion because I think most people don't get when you hit that buy button, what happens. And it's good to know that stuff, right?
Yeah, and I'd love to talk about the clearinghouses. What is a clearinghouse? What is DTCC? How do they interact with banks and the Federal Reserve? That's going to be a juicy one.
That's a
So
juicy one. Yeah, I've got a
we'll chat about
personal
that one
history
later.
with the OCC version of that. So
Okay.
it'll be interesting. Oops. You know what I love, by the way?
What?
You gave me this darn Bard thing, and I'm typing into it like all the time.
Bard is
right?
Google's AI. Yep.
Yeah, I love this thing. It's unreal.
I know.
So you could just sit here and just type in. I mean, I'm gonna make a poem one of these days.
I feel like quote from Trinity from Matrix. It's the question that drives us. You have to know what to ask it.
Yeah, you do have to know what to ask it. We have a question. we have a question. Can you go over a little more about the relationship between gamma and delta? I see we're almost done here. Can you remind me to give that definition tomorrow?
Yes,
and
Diego. Thanks for coming on.
Yeah,
and join us next time because we're going to answer that.
We're gonna go right through it. It's and then we're gonna ultimately tackle all the Greeks. So before we shut down here, the important Greeks are delta, and I'll do them in order: delta, gamma, theta, vega, rho. So those are the main Greeks. Now there's new Greeks called sub-Greeks that have come out, and we're going to get into those, and that's going to be two separate episodes because they're big and juicy.
And I feel like there's a million sub-Greeks. Is that right?
Well, there's not a million, but there's 100,000. No, I don't know how many there are. There's sub-Greeks come in the form of Vanna. You could be Vanna, Vana,
White,
Vama. They can be Charm, D Vega, Lambda. There's all kinds of sub-Greeks. And when I start on the floor with my pencil and paper, and we walked to work uphill both days, we didn't know any of this stuff. There was no secondary Greeks ever discovered. So that's a newer phenomenon. So stay tuned for that one. We'll make sure we go over all that stuff. Remind me, we're going to talk about the relationship between gamma and delta tomorrow. Is that cool?
Brilliant. I love it.
Okay. See,
I'm going to join you on that one.
You toss me these topics and they take so long to cover because they're so interesting and they're so involved.
I know.
We only get to the one topic. We missed the other part.
I feel like we should just talk all day. Just let me know what you think. Let's throw that around. Just hang out all day.
All day.
You get sick of me.
All right, Ma. Well, that was good. Let's catch up on the life of a trade, and we'll talk about delta gamma relationship tomorrow. Cool.
All right. Thanks, Lex.
All right. You know what time it is? It's time for the closing bell, and here it comes. Watch.
Yes.